Alright, just look at this for a second. Bitcoin is sitting right around 71k, and at a first glance, nothing really stands out. No explosive breakout, no crash, no panic, just a tight structure forming around a very specific zone. And this is where most people misread the market. Because when nothing is happening, people assume nothing is about to happen. But in reality, the opposite is often true. Some of the biggest Bitcoin moves in history start exactly like this. Not with chaos, with compression, with stillness, with a market that feels almost too balanced. Now, zoom out a bit. We're sitting between two major structural levels, 68k long-term support, which is 200-week EMA, and then there's the 83k major resistance, 200-day EMA. And price is stuck right in the middle. That alone tells you something important. We are not in a trend, we are in a transition zone. Now, at sentiment, which is fear and greed index 14, that is extreme fear, not uncertainty, not neutral, fear. So we have a strange combination. Price is stable, but psychology is not. And that mismatch is usually where the most important phases form. Let's break this down properly. The 200-week EMA is sitting around 68k. This is not just a line on a chart, it represents a long-term structural boundary for Bitcoin cycles. When Bitcoin is above this level, historically, it tends to be in macro expansion phases. When it loses it for extended periods, it usually enters deeper corrective environments. Right now, Bitcoin is sitting just above it, so we are in a very specific state. We are above macro support, but not far above it. That creates tension in the structure. Here's something most people overlook. Bitcoin recently dipped below 68k briefly. At that moment, it looked like weakness. A lot of traders probably expected continuation lower, but what actually happened is more important than the dip itself. Price quickly reclaimed 68k and held it. That is a failed breakdown, and failed breakdowns are often more important than clean trends because they show rejection of lower prices. It tells you sellers tried to take control, but it failed. After that reclaim, something very important happened. Price stopped trending. Instead, it started rotating inside a defined range, 68k to 72k. This is what markets do when neither side has control. Buyers are not strong enough to push higher, sellers are not strong enough to break lower. So price gets trapped in equilibrium. But equilibrium is never permanent. It's temporary balance, and temporary balance eventually breaks. The longer it lasts, the more pressure builds inside it. Now look closely at price behavior. Every time Bitcoin moves towards 68k, buyers appear. Not aggressively, not emotionally, but consistently. And consistency matters more than strength in early structure phases because it shows passive demand, even without hype, even without momentum, just steady absorption. At the same time, every move towards 72k gets rejected, not violently, but enough to prevent breakout. So what you have is a controlled compression box. RSI is neutral, no overheating, no panic, just flat movement. This matters because momentum is not confirming either direction. So the market is not trending, it's waiting. Let's step back. We now have macro support holding, failed breakdown below 68k, tight range formation, repeated demand at lows, neutral momentum. This is not random. This is a compression structure, and compression structures do not last forever. They resolve into expansion. Now, here is where things start to get more interesting because structure alone doesn't explain why. Now, to understand that, we need to look outside the chart. This week, there are multiple external signals that line up with this structure. One of the most interesting reports from Cointelegraph this week involves Iran and the Strait of Hormuz. According to reports, Iranian authorities are considering a system where ships passing through the strait may need to pay tariffs in Bitcoin, specifically around $1 per barrel of oil in BTC. Now, take a step back. This is not about trading, this is not about speculation, this is about settlement in global trade infrastructure. Even if the exact implementation details are still developing, the important signal is clear. Crypto is being considered as a payment layer in real-world geopolitical trade routes, and that is a major shift in perception because historically, Bitcoin was not part of global logistics or energy trade systems. Now it's being discussed in that context. If crypto becomes even partially integrated into global settlement flows, it changes liquidity dynamics over time, not immediately but structurally, because Bitcoin stops being only a speculative asset and becomes part of settlement infrastructure. That shift demands behavior over cycles. Another major narrative this week comes from stablecoin projections. Reports suggest stablecoin volumes could grow dramatically over the next decade, potentially reaching extremely high levels under aggressive adoption scenarios. But the key takeaway is not the number itself, it's what drives it. Generational wealth transfer, institutional adoption, payment retail disruption. In simple terms, younger capital is more likely to use on-chain systems, and companies are actively building infrastructure around stablecoins. Stripe, MasterCard, payment processors, this is not theoretical anymore, it's being implemented. We also saw around 471 million in Bitcoin ETF inflows in a single day. This matters because ETF flows are not emotional, they are mechanical allocation flows, pension funds, asset managers, institutional portfolios. And what is interesting is timing. These inflows are returning while sentiment is still deeply negative. That combination is important. Institutions are buying into fear, not into strength. That is usually how accumulation phases form. Another report from Cointelegraph references Bernstein analysts discussing quantum computing risks for Bitcoin. They estimate a possible 3 to 5 year window for preparation, but importantly, they do not describe it as existential. They describe it as an upgrade cycle. That distinction matters because markets do not price distant technical risk as immediate threats. It's a background evolution theme, not a trading driver. Now step back and connect everything. Real world trade settlement experiments, institutional ETF inflows returning, stablecoin infrastructure expansion, long-term technical evolution discussions, extreme fear in sentiment, and tight price compression. These are not isolated events, they are part of a broader environment shift. Now, we also need to stay grounded. Markets can fail ranges, and when they do, they usually move quickly. If Bitcoin closes decisively below 68k on a higher time frame, the structure changes. That would signal loss of macro support, but until that happens, the range is still intact and structure still holds. Let's zoom out completely. We're in a very clear structure. Support 68k, resistance 75k to 78k, macro ceiling 83k, and price is sitting in the middle. This is not a trending environment, it's a balancing environment, and balancing environments are important because they rarely last. They compress, they build pressure, and eventually they resolve. If Bitcoin breaks upward, the next major area is 83k. That would confirm continuation of the broader macro structure. If Bitcoin breaks downward, we revisit lower liquidity zones where demand has not yet been tested. But again, that is not confirmed. We're still inside compression. Now, the most important idea of the entire video, markets do not stay in balance forever. They resolve imbalance, and right now everything is compressed. So instead of asking, is Bitcoin bullish or bearish, the better question is, where does the breakout happen first? Because that breakout will define the next major phase of cycle. Right now, sentiment is fearful, price is stable, liquidity is building, institutions are slowly returning, structure is tightening. That combination does not stay quiet for long. So for now, the only real edge is observation. Watch 68k, watch 72k, and wait for expansion, because when this structure breaks, it will not move quietly. Now, with that pretty much said, thank you so much for watching. If you guys haven't already, drop a like down below, subscribe to the channel if you haven't already, of course, and with all that being said, have an amazing rest of your day, and I will talk to you guys in the next one.